All right, welcome back everyone to the deep dive. Today we're diving into something that's been, well, kind of keeping me up at night.
Oh, what's that?
It's Bitcoin. But not just Bitcoin in general. It's this feeling that something big, really big is about to happen in the Bitcoin market.
Yeah, I get that. There's definitely a lot of buzz right now, a sense that we're on the edge of, well, something. But it's not just vibes, is it?
Definitely not. There are actual signals, indicators, the whole shebang, all kind of lining up and pointing to a huge Bitcoin move. And that's exactly what we're going to unpack today.
Right. We need to understand not just that a move is coming, but what's driving it. So we're going deep on the market signals, the charts, what the whales are doing, even the global economy, you name it.
Exactly. Got to see the whole picture. So first things first, let's talk about this feeling of anticipation. Bitcoin's been pretty quiet lately, right? Kind of stuck in a holding pattern.
Right. We call that consolidation. It's like the market's taking a breath, gathering energy. And historically, after these periods of consolidation, especially long ones, we often see some pretty explosive price action.
Like a coiled spring.
Yeah, exactly. And there are a few other signs that suggest we might be nearing that release point. For one, volatility's been pretty low. Bitcoin hasn't been making any crazy jumps up or down lately.
It's been kind of boring, actually.
Well, boring can be a signal too. Low volatility often precedes big moves. It's almost like the market's calming down before a storm.
Interesting. And on top of that, we've got declining trading volume. Fewer people are buying and selling. What's that telling us?
Well, declining volume can mean people are waiting on the sidelines. They're uncertain, so they're holding back. But that hesitation can actually make the breakout even bigger. When something finally tips the scales, all that pent-up buying or selling pressure floods in at once.
So it's like a powder keg waiting for a spark.
Precisely. Then we have another signal, one that's a bit more technical: funding rates on exchanges. This is a measure of sentiment, basically showing which way the majority of traders are betting whether Bitcoin will go up or down.
So if everyone's betting on Bitcoin going up, funding rates for long positions will be high.
Exactly. And when those bets get really lopsided, it can create a risky situation. Imagine everyone's leaning on one side of a boat. If something suddenly pushes the boat in the opposite direction, everyone goes overboard.
So extreme funding rates in either direction can be a sign of trouble.
Yep, a sign that the market's getting a little too confident in one direction. Okay, so we've got these signals all pointing towards a big move, but the million-dollar question is, which way will it go, up or down? To get some clues, let's turn to the charts, to the world of technical analysis.
Let's do it. First up, the 200-day moving average. What is that, and why is everyone talking about it?
The 200-day MA. Think of it like a trend line. It shows the average price of Bitcoin over the past 200 days. If the current price is above it, it generally means we're in a bullish trend, things are looking up. But if it drops below, that could signal a bearish trend, a possible downturn.
And right now.
Right now, Bitcoin is dancing right around that 200-day MA. It's like it's trying to decide which way to go. A break above could mean a surge upwards, but a break below, that could be the start of a more serious correction.
Okay, so that 200-day MA, that's definitely one to watch. And what about the RSI? What's that all about?
The RSI, or Relative Strength Index, is a momentum indicator. It tells us if an asset is overbought or oversold. Think of it like a speedometer. If it's hitting the red zone, it might be time to slow down.
And where's Bitcoin on the RSI speedometer right now?
It's getting close to a level that has historically been a turning point. Not quite in the danger zone yet, but close. We could see a sharp reaction soon, up or down, depending on how things play out.
Okay, so more potential for a big move there. Last technical indicator we wanted to touch on, Bitcoin dominance. What's that, and why is it important?
Bitcoin dominance basically tells us how much of the total crypto market is controlled by Bitcoin. If dominance is rising, it means Bitcoin's doing better than other cryptocurrencies, the altcoins.
And if it's falling?
Then altcoins are likely outperforming Bitcoin. So Bitcoin dominance can give us a sense of market sentiment. If it's rising, it could mean people are moving to the safety of Bitcoin, maybe expecting a downturn.
Gotcha. So technical analysis is giving us some warnings, some hints that a big move is coming. But what about the big players, the whales? What are they doing?
The whales. Yeah, their actions can definitely move markets. And on-chain data, which tracks transactions on the Bitcoin blockchain, is giving us some interesting insights into what they're up to.
So are they buying, selling, what?
Lately, we've seen an increase in the amount of Bitcoin held in large wallets. This suggests that some whales are accumulating, buying up Bitcoin, and maybe betting on a price increase.
That sounds bullish, right? Whales buying usually means good news.
It often does. And it's not just that, we're also seeing less Bitcoin held on exchanges. This could mean that whales are moving their Bitcoin off exchanges, perhaps into cold storage, where it's less accessible for selling.
So they're taking it out of circulation.
In a way, yes. This reduces the supply of Bitcoin available for trading, which could put upward pressure on the price. It's a classic supply and demand situation.
Fascinating. What about the Bitcoin options market? What are the whales doing there?
Options are basically bets on where the price of Bitcoin will go, and what we're seeing is a lot of activity in options contracts that would pay off if there's a big price swing, either up or down.
So they're preparing for volatility no matter which way it goes.
Exactly. They seem to be expecting fireworks. All right, let's zoom out even further. We've talked about market signals, technical analysis, whale activity, but what about the big picture, the global economy? How's that playing into all of this?
Yeah, Bitcoin doesn't exist in a vacuum, right?
Yeah.
It's got to be affected by what's happening in the world.
Absolutely. And one of the biggest factors right now is the U.S. Federal Reserve's interest rate policy. When interest rates rise, it can make safer investments like bonds more attractive. That can draw money away from riskier assets like Bitcoin.
We've seen a lot of interest rate hikes recently. Has that been hurting Bitcoin?
It's been a factor, definitely. The higher interest rate environment has generally been a headwind for Bitcoin and other risk assets. But, and this is key, if the Fed signals that it's going to pause or even reverse those rate hikes, that could be a huge positive for Bitcoin.
So watch the Fed closely. Got it. Now, what about inflation? Everyone talks about Bitcoin being an inflation hedge. How does that work?
The idea is that Bitcoin's supply is limited. There will only ever be 21 million Bitcoin. Governments can't just print more like they can with fiat currency. So in theory, Bitcoin's value should hold up better during periods of high inflation.
So if inflation stays high, that could actually be good for Bitcoin.
It could indeed. It could drive more investors towards Bitcoin as a way to protect their purchasing power. And lastly, we need to consider the stock market. Believe it or not, Bitcoin and the stock market often move together.
Really? I hadn't noticed that.
Yeah, they're more correlated than you might think. This means that if the stock market takes a tumble, Bitcoin could follow suit. However, some believe that in the long run, a stock market crash could actually benefit Bitcoin. People might see it as a safer alternative.
So it's a bit of a double-edged sword.
Yeah.
Okay, so we need to keep an eye on interest rates, inflation, and the stock market. Got it. Now, for the big elephant in the room, regulation. Governments and regulators, they can really throw a wrench in the works, can't they?
Oh, absolutely. Regulation is a huge wild card for Bitcoin. It could bring more clarity, legitimacy, even stability to the market, but it could also lead to restrictions that stifle innovation and drive down the price.
So what are the regulatory things we should be watching out for right now?
Well, the U.S. Securities and Exchange Commission, the SEC, is always a key player. Their approval of spot Bitcoin ETFs was a big win, but they're still figuring out how to regulate other parts of the crypto market. Tighter rules on exchanges, lending platforms, even what qualifies as a security, all of that could have major consequences.
And what about those central bank digital currencies, CBDCs? How could those impact Bitcoin?
That's a big question mark. If governments start pushing their own digital currencies, they might try to discourage people from using Bitcoin. They might impose restrictions, try to control the narrative. That could create some short-term headwinds for Bitcoin.
And then there's the mining issue. China cracked down on Bitcoin mining. Could other countries do the same?
It's possible. While the Bitcoin network has recovered from China's ban, if more countries follow suit, it could impact the network's security, make it less resilient. So yeah, regulation is definitely a wild card.
Okay, so we've covered a lot of ground here. A lot of potential catalysts, a lot of risks. So bottom line, what can our listeners do to prepare for this potential massive move in Bitcoin?
Preparation is key. First, stay informed. Read the news, follow credible analysts, look at on-chain data. Don't just blindly follow the hype.
Do your own research.
Exactly. Second, manage your risk. If you're trading, don't bet more than you can afford to lose, and use stop-loss orders to limit your potential downside.
Protect yourself from those big swings.
Right. And if you believe in Bitcoin long-term, try not to panic over short-term price movements. Volatility is part of the game.
Easier said than done, but good advice.
It's about having conviction in your investment thesis. And consider diversifying. Don't put all your eggs in one basket. Stablecoins, other altcoins, those can help balance your portfolio.
Don't go all in on one thing.
Right. And finally, watch those key price levels, especially $50,000 and $40,000. A break above or below those levels could signal the start of a major trend.
So the next few weeks, they could be pretty wild. A big move is coming. We just don't know which way.
It's going to be a fascinating ride, for sure. And the more informed you are, the better you'll be able to navigate it.
Well said. So what do you think, listeners? Up or down? Let us know in the comments. And until next time, stay informed, stay safe, and stay tuned.
Absolutely. Thanks for joining us.
See?